Introduction to Options Trading, Module 2, Technical Analysis. As you complete the module, be sure to watch, to read the footnotes, as well as listen to the audio for the full course experience. Take a moment to review the disclaimer outlined on your screen and then proceed when ready. Think back to the course overview when I questioned if you could spot the patterns. Spotting the patterns begins with an understanding of the candlesticks and the data they provide about stock price and movement. Stock price data shown by candlesticks is one vital key to technical analysis. A candlestick is simply a visual representation of a stock's price movement on a given time frame. Depending on your trading platform, you may be able to set your time frame anywhere from 1 minute all the way up to 1 year. So for illustration, if you set your time frame to the day, that single candlestick will show you all of the price movement for 1 day. If you set your time frame to the week, WEEK, one single candlestick will represent a full week of price data. Regardless of the time frame, each candlestick will tell you the open price, the closing price, the highest price, and the lowest price that stock traded for on that particular time frame. The green candlestick you see on your screen represents a bullish candlestick. Bullish simply means that the stock's price increased and closed higher than its opening price. The red candlestick you see on the right of your screen represents a bearish candlestick, which means the stock's price decreased and closed lower than its opening price on that particular time frame. Many trading platforms will allow you to choose your own colors if you want to, but to quickly identify bullish and bearish, I've chosen green for bullish and red for bearish. The body of the candlestick captures the open and close price. A wick or a thin line at the top of the body illustrates that the stock's price increased higher but was unable to maintain that highest price at the time frame's close. Likewise, a wick or a thin line at the bottom of the body illustrates that the stock's price decreased lower but was unable to maintain that low price at the time frame's close. The body and the wicks encompass the full price movement of the underlying stock on that relative time frame. Be aware, some options traders do not consider the wicks to determine the highest and lowest price on a given time frame. Personally, I do consider the wicks. It is a matter of style and preference. When you develop your own personal trading strategy and conduct your research, you will determine for yourself whether you will or will not consider the wicks. It's time to apply your knowledge. Study the illustration on your screen. Then answer the following test questions in the 15 seconds allotted. At the expiration of time, the correct answer will appear on your screen. Let's go. What was Visa's closing price the week of April the 22nd? What was Visa's opening price the week of April the 29th? What was Visa's highest price during the week of May 13th? Price support and resistance. In addition to demonstrating open price, close price, highest price, and lowest price, candlesticks can also provide clues as to price support and resistance. Price support and resistance tend to demonstrate points in a stock's price where a stock may reverse and go in the opposite direction. For example, a stock's price per share may begin to decrease until it hits a floor or support, followed by a reversal where the same stock begins to increase in price. The converse is also true, that a stock's price per share may begin to increase until it hits a ceiling or support, followed by a reversal where the same stock begins to decrease in price. One way to help identify price support and resistance is with engulfing candlesticks. Some options traders utilize technical indicators like moving averages, trend lines, RSI, and other data to determine price support and resistance. Now, I encourage you to check out the education materials available through your brokerage platforms to find out if those other indicators may fit your personal style. For purposes of this course, I will demonstrate how I utilize the engulfing candlestick to identify price support and resistance. So let's dive in. What is an engulfing candlestick? The engulfing candlestick literally engulfs the candlestick to its immediate left, in that the highest price and lowest price of the engulfing candlestick exceeds both the highest price and the lowest price of the candlestick to the immediate left. To visualize this, the candlestick to the immediate left could fit fully inside of the engulfing candlestick. Study your screen here. Just for illustration, the white candlestick is an engulfing candlestick. For my options trading, I determine whether a candlestick is an engulfing candlestick in relation to the candle to its immediate left. I connect the high prices of these two candlesticks. I also connect the low prices of the two candlesticks. For this example, the connected line at the top shows potential price resistance. The line at the bottom illustrates potential price support. So why do these levels matter? For my trading style, I specifically pay attention to these areas for potential price reversal for the trade entry. The space from support up to resistance, or from resistance down to support, may create trade opportunities to allow me to execute specific trade strategies. My advanced course on trade strategy goes deep on those specific strategies. When your foundation is strong, I encourage you to proceed in your educational journey with those advanced courses and strategies. It's time to apply your knowledge. Study the illustration on the screen. Answer the questions in the time allotted. At the expiration of 15 seconds per question, the answer will appear on your screen. Let's go. Identify the engulfing candle. Practice drawing price support and resistance. We have reviewed the vital information you can learn from a candlestick, namely the open price, the close price, high price, and low price of a stock on a given time frame, as well as how to use engulfing candles to identify potential price support and resistance zones. Now, let's review specific candlesticks that may evidence price reversals, the hammer candle and the shooting star. beginning with the hammer candle on the far left of your screen. The hammer candle is generally considered a bullish sign that a stock's price may increase from its current point. The hammer candle generally has three distinct characteristics. 1. The hammer candle typically has little to no wick at the top. You remember what a wick is from the previous slides. 2. The hammer candle has a small body captured within approximately the top 1/3 of the entire price range of that candle. And 3. The hammer candle has a longer wick at the bottom. Visually, you can spot these three characteristics: the little to no wick at the top, a small body within the upper 1/3 range, and a long wick at the bottom. Pause and think about why these characteristics may signify an increase in a stock's price. We previously discussed that a wick at the bottom suggests that the stock's price decreased but was unable to maintain that lowest price at the time frame's close. With the hammer candle, price went lower but began to advance all the way back to the top third of its entire range. That type of price movement suggests that buyers have shown interest and stepped in to buy this stock. Consider the law of supply and demand. The more demand, the lesser the supply, and the higher the price. A hammer candlestick is relevant because the presence of the long wick suggests the stock may be in demand, and the price will therefore increase. Options traders may look for the formation of a hammer candle at or near a price support zone to signal potential price reversal upward and a potential options trade opportunity. Please note that hammer candlesticks don't always look the same. They may look a little different from what's displayed on your screen in terms of the size of the body. However, the three distinct Please note that hammer candlesticks don't always look the same. They may look a little different from what's displayed on your screen in terms of the size of the body. However, the three distinct characteristics described should still be present. Let's move forward and discuss the shooting star candlestick. Unlike the hammer candlestick, which is considered bullish, a shooting star is considered a bearish signal that a stock's price may begin to decrease lower. Like the hammer candlestick, the shooting star has three distinct characteristics. 1. The shooting star candlestick typically has little to no wick at the bottom. 2. The shooting star candlestick has a small body captured within approximately the bottom 1/3 of the entire price range of that candlestick. And 3. The shooting star candlestick has a longer wick at the top of its range. Visually, you can spot these three components. See the little to no wick at the bottom, the small body in the bottom 1/3 of the price range, and the long wick at the top. Pause and think about why these details may signify a decrease in a stock's price. We discussed that a wick at the top suggests that the stock's price increased but was unable to maintain that highest price at the time frame's close. If you don't recall that discussion, go back a couple of slides. With the shooting star candlestick, price went higher but began to decrease all the way back to the bottom third of its entire range. That type of price movement downward suggests that sellers are dumping this stock. And we all know the law of supply and demand that we just discussed. The less demand, the more the supply, and the lower the price. A shooting star is therefore relevant because an options trader may look for the formation of a shooting star candlestick at a price resistance level to signal potential price reversal downward, therefore signaling a potential trade opportunity. Note that shooting star candlesticks may look different in terms of the size, the body, and the length of the wicks. However, the three distinct characteristics we discussed should still be present. Be aware that there are other styles of candlesticks as well as candlestick patterns. I focus on the hammer and shooting star candlesticks for this course because they are most relevant to my personal trading style. It's time to apply your knowledge. Take a moment to study the visual illustration on the screen and answer the following 3 questions. Let's go. Identify the hammer candlesticks. Identify the shooting star candlesticks. Identify the engulfing candlesticks. Congratulations! You have completed Module 2 of the Introduction to Options Trading course. Consider rewatching and re-listening to this module at least twice before moving on. Repetition may help you grasp new concepts. Module 3 will build upon Module 1 and Module 2. In that, Module 3 will provide real trade examples that demonstrate how I utilize options trading to generate income.